Okay, I have started broadcasting. Georgie will be back in a few moments at 7. I know Kayla, she didn't come to calls. Alex, haven't seen him spell. Who's the 10th person? Savannah. We just about Savannah. I hadn't seen her. Savannah, Bob, Alex. And then, of course, Kayla yesterday. Weather could have something to do with it. There's probably some slick side roads, slick mountain roads, what have you. But, anyway, this snow was crazy. I saw on TV the other night that Brookville, Virginia had an inch. From the TV station in West Virginia, it was 4 inches. Monroe County, it was 12 inches. So, I mean, it's you get killed. Secret. But anyway, playing time. So we're supposed to be out playing the garden. Okay, little things is causing our tax returns to be rejected. Giorgio has one rejected. That little woman's down in Florida. She's wearing her head off. And they've talked to her. They've checked with her. Her social security number's right. Her name's right. And I talked to her this morning. I told her we'd try to e-file it again. If we didn't take it, we'd have to give her a paper copy. She'll be back from Florida in time to pick it up before April 15th, April 17th, maybe this year. The lady come downstairs just now. This is for Jessica. She had to write to Social Security Administration. Anyway, it was for her son. And she had told Jessica that her son's name was Monka Page Coe. Well, I guess she's divorced, but when she got him a social security number, she turned him in as Phillips. So yeah, if they give us a wrong last name for themselves or a child or anything, it's going to reject it. So it's her fault that this was rejected. Not always our fault. Now, we had 36 people that were disappointed last night. All right? I asked Michelle to call all 36 and give them more appointments. And she's filled up for next week. And we only have a couple of weeks after that. She's got one of them almost filled up. We'll have after she reschedules these people. Worst comes to worst, if we add on a Tuesday or a Thursday night in April, like April the 9th or April the 11th. Does anybody have a class on Tuesday night? Anybody have this almost class on Tuesday night? All right, who could come out on a Thursday night if we needed it? If we needed you? Who would want you to can? Okay, I have to check. Like Austin and Kevin. Tracy, they took the easy way out. Okay. Now, today, one lady called and she took off work to be here yesterday. And she came here yesterday, 4 o'clock. Nobody was here. Anyway, she can't take off work again. She's off work on Thursday. That's today. She's gonna bring her tax return here at 1:30. Okay. Now, Giorgio said he could stay and finish. But I've got some man. I just walked in the office. He was down there. So simple, it's his nephews or something. So who can stay at 1:30 and do a real simple one for this man's nephew? Kevin, you'll do it 1:30. All right. He said something about bringing his niece. He brings his niece. Do I have somebody else to stay for 15 or 20 minutes? Still get out. Like last time, I hope, 42, you go tax return. I have to, all that, and a video, keep it up to at least 15 to 2. If I have to. Okay, how many returns have you done, Olivia? I know we missed it the other night, that's gonna cause some returns. And how many have you done? Done that many, Olivia? Robert, do you remember how many you've done? All right, Olivia, I have one of my desks, I'll give you to take home. You don't have to stay and do it. She's a former student, she may still be a student here. She's in her own last year return. I haven't even looked at it, but dig it. Probably a little simple W-2. So I'll give you her to take home. Just have a lot to take care of, okay? All right, the other day, we started on corporations, and we had a tax problem that was due Tuesday. Some of you, don't observe the due date very good unless it's payday. Always reserve that day, observe it, okay? Now, who needs to give me that problem? This was number what? 56. Kevin, did you give me that problem? All right, I did give you the twos if you had to, have it till Tuesday. All right, and you have another one due Tuesday too, right? Now, on this one, Tracy's getting back $976 refund. That didn't match in the two we had the other day, did it? So, you may have had to pay for this. Amount you owe, 976. So we've got 3 different answers. All right. If we get 9 or 10, that's okay. Bring this problem Tuesday along with the other problem. We need to look at it. Okay, that takes care of that. Right, the other day we were looking at corporations, but also I said we need to go back and look at some problems in chapter 13 to wrap that one up. So, is that yours, Robert?
Yeah.
Well, they look like these papers had a rough time. Yeah. Okay, now, Robert. Okay, Robert. I wish you'd keep it till 2. I need that back to the week. Right back to you. All right, let's wrap up chapter 13 once for all, and we will look at those 2 problems on Tuesday. I hope we looked at some problems in the other chapter, because you're soon going to have a test next week, probably on chapter, 11, 12, 13. And hopefully we looked at some problems in each chapter, and that's why we're looking at 13 today. Probably you'll have a test next Thursday, a week from today. Please have problem 68 done. Now I've asked you to look at the even problems, but some of you do work, and about all of you work. Kevin, how many hours a week do you work? Anna works 40. How many do you work, Olivia? How about you, Robert? How about you, Austin? I don't have a job. All right, how about you, Tracy? All right, see, 5 out of 6 of them are working full time. Now, that's hard. You got a lot on your plate. You got to work full time, and some of you have a full load of classes. A couple of you have kids, and Tracy, you got 3 or 2? 3, and so forth. So, Austin, since you're the only one unemployed, we expect you to have the highest grade on every test because you got more time to. Okay. But anyhow, there's nothing wrong with work while you're in college, okay? But a lot of times you rob Peter to pay Paul, and most of you are good students, whether you're working or not, so just keep that up, I suppose. Savannah, she started a new job that maybe why she's not here. She has to take a couple of weeks training. Kayla, I don't think she works too much. And Giorgio, he's work study. And Caitlin Campbell, I think she just has a work at keeping her husband straight. Since he's a preacher, she wants to keep him out of one of these scandals that preachers get into. So it keeps her busy. All right, so let's go to the problems on page 13-30. We do have to look at some of these games and explain them if need to be. Look at number 33. I asked you to do even, but that's okay. We better look at number 32. So take a minute, Tanda, and be able to answer A for us, Olivia B, Robert C, Austin D, and E for Tracy, and F for Kevin. All right, that worked out perfect. Okay, Tanda, what did you say about land on which a factory is located? All assets have been held for more than a year. Which assets might be classified as 1231 or 45 or 50? An asset be classified as more than one type. Now, I asked you to read the section on the 50. We'll get back to that. But Tanda, what did you do about land? 1231, it's a long-term asset, okay? And I'll try to show you these answers as I scroll up. But yes, land is a 1231 because 1231 ends up being long-term capital gain. It goes over to Schedule D, and you got only taxed at 15%. Okay, how about equipment for use in the factory, Olivia? It can be both. If you recapture depreciation, it's 1245. And if you sold it for more than you originally paid for it, it's 1231. And how about raw materials inventory, Robert? Okay, now, folks, listen up on this one. Raw materials are raw materials. And you're making something out of raw materials, or you're selling them, which is part of cost of goods sold. So neither on this one. And I'll show you all of them in a minute. Okay, how about a patent purchase to allow use of a manufacturing process? Is that Austin?
1231 and 1245.
You see, a patent can be amortized, just like equipment can be depreciated. So yes, on patents and depletion and depreciation. Okay, how about the next one, Tracy? All right, that is land held primary for sale. No, that's just investment. Now, if we hold land primary for sale, we're just gonna put it on a Schedule D. We'll get long-term treatment on it, but we don't call it 1231 because it's not a business asset. Okay. And the last one, Kevin, was a factory building. What do you think?
1231.
And a 12 what? No, buildings will come under the 1250. All right, equipment 1231, building 1231, patent 1231. But equipment and patents, anything, if you depreciate it, deplete it, or amortize it, usually, other than buildings, it's a 1245. But buildings come under 1250 because you could have used straight line depreciation on it. And you may not have as much to recapture on under buildings. So that's what that 1250 is for. And number 33, I feel like we must look at that one. We have an AGI of 40,000 without considering the gains and losses. Determined to revise AGI after the inclusion of any applicable gains or losses for the following independent cases. It seems she has none recapture, section 1231 losses at the beginning of the year. So no carryovers. All right. Case A, take a minute and come up with an answer for that one, Kevin and Tracy. Case B, Tand and Olivia, and case C, Robert and Austin. Take a moment, all of you, and come up with an answer for your case. All right, let's look at number 33. Kevin, did you or Tracy either one come up with 54,000? See how to get it, Kevin? It was net long-term capital gain. Okay. And that one you had 19 gain and a 5 loss, just add 14, right? Now, this still should get special treatment of 15% somewhere. Okay, now B part, did you come up with that? Did you come up with that, Tanda? You all? All right, now that was 40,000 minus ordinary loss. Could be a business loss or anything. So at a 10 gain and a 22 loss, that left a 12 loss that reduced AGI. Just want you to see how these work. Okay, Robert and Austin, did either one of you come up with 30,000? Okay, that was long-term loss of 3 and ordinary loss of 7. Okay, on that one, Robert, since it was a long-term loss of 63, you and Austin, did you remember that you could only take 3? Robert did. Austin, did you remember you could only take 3? Okay, that's where that comes from. You are limited to taking 3. All right. We're gonna look at 1235. I'm gonna pass these around again. Kevin A, Giorgio B. You don't have a book, slide where there is one. C for Olivia and D for Tanda. All right. 1236, A for Robert, B for Austin. And 1237, A for Tracy. About finished, Lorenzo?
Yep.
All right, you owe $50 in rent. You're welcome.
I'm good.
Okay, yeah. Okay, the purpose of these problems is, take care, Lorenzo. Purpose of these problems is to get you used to the word or the numbers 1231 and 1245. You hardly ever see 1250, so I'm concerned about these items. Now, this was problem 35. Gosh, can't get stay there. whoever had these, Kevin probably had this one. Did you figure that out, Kevin? Personal use asset? If I'm in the right place. Yeah, diamond ring, that's a personal casualty loss. You take it as itemized deduction. Okay, section 1231 gain. Olivia 10-1 had that one. That's gain due to condemnation of land used in business. All right, it's used in business. It's a condemnation. It's like a casualty, and that could be a section 1231. C was probably Olivia loss on the sale of a warehouse. It's a 1231 loss. Now D part, which Robert probably had, all of the 4,000 gain is section 1245 ordinary income, because there was no recapture or depreciation that allowed 10,000. So you'd have to have more than a 10,000 gain to get there. All right. See, I'm trying not to put you all on the spot. Now 36, which Austin, Giorgio had one there somewhere. I got off target there, I guess, because he moved on me. All right. Who had this one? 36A. Anybody? Austin, you didn't have that one? All right. Okay, on 36, capital loss versus section 1231 loss. That's a good question. That's what I was just trying to explain a minute ago, but to look at it, Vicky has an AGI of 70,000 without considering the sale of a non-depreciable asset for 23,000. The asset was acquired 6 years ago and has an adjusted base of 35. She bought it for 23. She has no other seller exchanges. All right. So determine her AGI for the following independent situations when the asset is a capital asset. All right, if it's a capital asset, you take 70 minus how much? For long-term capital loss, how much do you get? 3,000. Okay, now that's well and good. But now look at B part. If it's a section 1231, I still call it capital asset. You still go to Schedule D. If it's a gain, you still pay on 15%. But how much of the loss do you get to take if it's a 1231? If I'm looking at the question right. If it was section 1231 property, you'll get to take all the 12,000 and reduce your 70 down to 58. So that's the difference. Which one's the best then? A 1231 in this case or capital loss? 1231 is better, isn't it? You get to take all the loss. Okay, and we had a little bit of number 37. Now, Tracy had A part, but look at number 37. At the beginning of 17, Silver Corporation has 95,000 capital loss carryover. During 17, the corporation sells land held for 4 years and realizes 80,000 gain. Silver has no unrecaptured section 1231 losses and made no other sales during the current year. Determine the amount of capital loss carryover that you can use in 2017 if the land is 1231 property. All right. How much of a carryover did they have? 95. All right. And how much was the loss? Okay, you had a gain. They realized the 80,000 gain on land. They had a 95,000 carryover. So now, Tracy, does 37A make sense to you? The gain is a section what? That is classified as a what? All right. Now, what was the 80,000?
That was, plan held for 4 years, realized $80,000 gain.
You realize 80,000 gain, but you're supposed to carry over how much?
Had a $95,000 capital loss carried forward.
What was the question?
Determine the amount of capital loss carried forward that Silver can use in 2017 if the land is 1231 program.
The whole amount, the whole 80. You get to use 80,000 of that 95. You have to look at the question right. It sounds to me like we got 80,000 gain, right? It's a 1231 gain. Now, we carry over this loss of 95. We're gonna use 80 of it. We'll have 15 left. That means you had no gain taxed on that land this year. Tanda, you getting ants in your pants? Do you have to go? You didn't hear me though? I asked were you getting ants in your pants? And you are, so you can go. All right. All right, the second part of that question, which no one had, if it's not a capital asset or a section 1231 property, then look at 37, 0. If it's not a capital asset or section 1231, you don't get to use that carryover against ordinary income, is what it's saying. You do not get to use it. All right. I'm going to give you an easy one. Problem 39. All right, Giorgio, you have 12. Let's see if this is going to work. No, this will not work. I cannot give it to you individually because the last one have to know what the first one did. I will not give you that one then. Let's go down to number 44. Kevin A. No, you may have to work this one together. It don't matter. But all of you may have to work this whole thing. Kevin A, B for Olivia, C for Robert, D for Austin, E for Giorgio, and F for Tracy. This is number 44. But you may have to work out every part to answer your question. But Kevin may have had the best, easiest one if he's got the first one. So take a minute and do number 44. All right, first off, I want you to look at number 39. 39, we have a bunch of these losses. So I want you to look at the question first. 39, consider the following summary of 1231 gains and losses during this period. Tenant has none recapture losses at the beginning of 12. The tenant has no capital gains and losses during the 6-year period. Determine her net capital gain and ordinary income or loss for each year. If tenant has no capital gains and losses. All right, but in 1912 or 2012, she had 9,000 Section 1231 gains and 7,000 losses. Now that nets out, and it should be $2,000. Net long-term capital gain, $2,000. All right, that was easy enough. Number 13. She had 20,000 gains and $24,000 losses. All right. Now, what did she have? How much of a gain?
20,000.
And how much loss? The difference is 4. All right. Now, and it's an ordinary loss too, isn't it? 4,000 ordinary loss. Let's see what. $20,000 gain, 24 loss. All right, when you have a loss on 1231 gains, it's a good loss. You would take the whole 4. All right. Now, if this was capital gains and losses, you're only going to take 3. You're going to take 4 because it's section. We looked at that a minute ago, didn't we? Okay. How about 14? You had a 12 and a 19. The difference is $7,000. And that's also an ordinary loss. Now, 15. 15, you had a 9 gain and a 4 loss. The difference is 5. All right. The 5,000 net gain is ordinary income since there is 11,000 of non-recapture net losses at the beginning of the year. Net non-recaptured 1231 loss at the end of the year is 6. So you're going to use 5,000 of this 11, and that leaves you 6. Okay. And then 16, 35, or 25, and 13, 2. All right, 25 and 13, 2. But where are we getting this 1950 from? Am I not reading something?
That's the wrong problem.
Do I?
That's the wrong problem. That's 4.
Oh, I went down, didn't I? Yeah, I went down too far. Should be going right here. Okay. 16. Okay. What is 25 minus 13, 2? How much?
11,800.
All right. Now we know that's 11,800, and we know 58.6 makes 11,800. So somewhere in that problem it has to read that there was 6,000 depreciation. Did it say there was $6,000 worth of depreciation somewhere? See if there's 6,000 accumulated depreciation. No? There's no basis then. We had a $6,000 loss at the end of the year. So that $6,000 loss is where that's come from. These will offset. There'll be 0 ordinary income. You'll carry over plus your recapture. But there'll be net long-term capital gain of 58. Okay, and 17. 10 and 17. You had a gain and you had a loss. So you have a loss of 7. We can see that. It's an ordinary loss. You can take it, but what's this? What's the zeros over here for? It has 2 questions, I guess.
This is determine her net capital gain and ordinary income or loss.
All right, so here's your net capital gains, usually zero except here. But just this one. All right, and no ordinary losses. Okay, just trying to get you to see a picture of some of those things. All right, now I want everybody to take a minute and read number 41. Take a minute and read it and let some numbers run through your head. All right, if you've taken a minute and read that one, we've got case A and a B and a C. Now, the Para Corporation owns equipment with 300,000 adjusted basis. It was purchased 6 years ago for $650. Now, what is $650 minus $300? What's $650 minus $300? All right, your basis is how much? 300, and you sold it for how much?
407.
All right. So how much the gain is? And what is the gain on the property?
107.
All right, how come it's all ordinary? Because that's recapture of depreciation, isn't it? Now, what do we sell it for in B part?
752.
Minus 300 gives you 452,000 gain. Ordinary income is the depreciation up to 350, and the rest of it is section 1231. All right, what do we sell it for in C part?
245.
All right, so subtract that from 350. When 300, we had a $55,000 section 1231 loss. All right. Now, Giorgio, tell the class what a section 1231 versus a 1245 is. Has to be a business asset. But normally, what I've been telling you, what you see in this problem, section 1231 gain is gain above and beyond the original cost. Now, which one of these did you sell it for more than what you originally paid for?
B.
B. So which one of these has a section 1231 gain? B. Now, what did you have here in A and 350B? That's ordinary because that's what? Recapture on depreciation, which makes it 1245. If it's ordinary, it's 1245. Now, if you have a loss, we know you're selling it below its basis and depreciation is not involved. If you have a loss, it's automatically 1231 loss. And you can take all of it. Okay, so hopefully this 1245 and 31 is starting to paint a picture somewhere. Now, let's look at the problem you had, problem 44. Kevin, what was your answer on problem 44?
2000.
How much?
2000.
I don't know. Let me see. All right, Kevin says, this thing's not writing today for some reason. All right, I'll just have to take Kevin's word. It's not writing today. Or let's see if it'll write on notebook. All right, Kevin says 2,000. All right, who had B part? Liv, did you have B or Robert? What'd you have for B, Robert? How much? 28,000. All right, let's slow down right here. These two figures cannot work. You realize can't be 2 and you recognize 28 of it. All right. Which one did you have, Olivia? Gain treated as ordinary gain. How much? 26. And then Austin, how about gain treated as section 1231? I think that's probably what Kevin. And Tracy, basis of marketable securities received.
I had the equipment, but it's 30,000.
And what was the last one? Giorgio or Tracy, basis of equipment?
42,000.
All right, now here's our answers, folks. And let's see what we have. All right, Kevin, I think the only place you went wrong, you were trying to calculate the gain. But it is 28. And Robert says we have to recognize all that. It's more than the realized, since the boot received is more than the realized gain. And 26,000 the gain is 1245 ordinary. 2,000 is 1231. And market securities, Tracy or Giorgio 11030. Did you say 42 for the equipment? A marketable security, yeah, equipment. All right. So again, that's digging into bases. And 1231 and so on. I want you to look at 1247 for a moment. And let's look at it together. I want to look at it because it says section 1250 property. Real property placed in service for 81. Charles owns an office building and land that are used in trade or business. The office building and land was acquired in 78 for 800 and 100. During the current year, the property was sold for 900 and 20% of the selling price being allowed to the land. Well, 20% of 900,000, you sold the land for 180,000. The assets as shown on the taxpayer's books are, what is the recognized gain? Now, I want to just skip through these. Number 47. All right, what was the 720, folks? What's the 720?
That's how much he actually got for the building after you subtract 20%.
Actually, subtracted 20% plan. So 80% of 900,000 is 720, isn't it? And its basis was what? I thought its basis was 6T. I mean, 1T
Building,
for the building. I don't know. What was its basis?
acquired in 1978 for $800,000.
Well, you subtract 690 from it, and what's its basis?
Okay.
110. Okay.
That's the water part.
Yeah, it's got that. That's okay, Tracy. So what does this 610 answer? What's question A?
Recognize gain due to the sale of the building.
Recognize gain. Okay. Now, that'd be ordinary gain. Wait, what's the original cost of the building?
$800,000.
Original cost was 8, and you sold it for 720.
Appreciate it.
Whatever you depreciate would be ordinary section 1245. So let's see what we got here. What was the 690 again? What's the 690?
Accumulated depreciation.
And what's the 560? All right. Section 1250 ordinary income, and 480 is section 1231 gain. 480 gain is on recapture, section 1231 gain, taxed at the rate of 25. Now C part is 180 minus 100. That's the land, isn't it? We're gonna go back to B, but C, is that the land? What did we sell the land for?
180.
We sold it for 180. What was its basis?
100.
100 from 180 is what?
Okay.
Well, that's easy. That's section 1231 gain. There was no recapture depreciation. Now, right here, I want you to read this and see where the 1250 came from. Sometimes you have to figure out straight line depreciation, but I don't know what they've done here. So, the 690 is accumulated depreciation, right? Okay, Kevin, the 690 is, all right,
They gave you the straight line.
did they give you that
Yeah.
number? See, that gain above and beyond straight line, all right, if our accumulated depreciation was 690 under double declining balance or LBCRS, straight line would have been 560. So we're gonna get 130,000 of section 1250 ordinary income. And 480 is 1231 gain. Gives you a little bit more 1231 gain when you're taxed at a different rate. 1250 has to do with real property, which is building, not land. 1250 is accumulated depreciation above straight line depreciation. Here is LBCRS, and here is straight line. 130 is section 1250 ordinary income, okay? And you got more section 1231. Okay, you know your assignments pretty much for Tuesday. Some of you have 2 problems due, some of you have 1 problem due. All right? I hope we have everybody in attendance on Tuesday because we'll have the test next Thursday. All right, please read the first chapter, chapter 2 on corporations if you haven't done so already. Now I've got 2 people and I'm assuming they'll be here in a couple of minutes. So Giorgio, you're going to stay and do this man's nephew's taxes. And Kevin, you're going to stay and do this lady. If she's pretty, I'll give her to Giorgio. He's a big flirt and you're not. But anyway, I'm kidding. Okay. But anyway, these 2 guys are going to stay in the tax return. Okay, the rest of you can leave. And you folks out there in viewing land, I'm going to cut you off. Have a good weekend. Savannah, I hope the job is going great.